The number one issue that I see with business owners is a lack of clarity around what to do with their excess income. After all, the most common situation is you either started a business or you acquired a business. And as your business grew, your income grew as well. And there's this constant wrestling of, do I reinvest these dollars in the business? Do I take some chips off the table? Well, today we're going to look at what we call cash flow planning, which is a framework we use to help give business owners clear direction for what to do with their income. My name is Luke Turner, co-founder of Moment Private Wealth, where we help athletes and entrepreneurs get smarter with their money. So let's dive in. Okay, so as I mentioned, today's video is going to be all around cash flow planning and the framework that we use in order to give direction to the excess income for a business owner. So what we're looking at here is what we call a cash flow map. And in this video, I just want to walk you through how we think about this and the ins and outs of this particular cash flow map. So this is a very common situation we see for clients. So over here on the left-hand side, we can see our income, and we can also see some self-employment income, which is something that we're seeing more and more of, where there is a W-2 wage or W-2 plus distributions from an operating business they're owning. And then there could be additional, we call consulting income, where they either have a side business or they have a business that they're getting paid for their services to come in and consult on other businesses in that industry. So in this situation, we're going to say that we're making $750,000 from the business we're operating, which you can see up there on the top left-hand side. And then on the bottom left-hand corner, you can see that we have $250,000 of what we're calling consulting income, which is 1099 income. So the first step is identifying how much money we think we're going to make. This is one of the most difficult things to identify with business owners. But typically, if we can get close to, say, 80% of what we think you're going to make over the course of the year, we can draw out a pretty clear cash flow map. So that is our left-hand side that's in green. And then let's go ahead and move over to the right-hand side. The first thing that we want to look at is, what are we anticipating our taxes to be in that year? So this is one of the most important things to look at because, one, we know that it's likely going to be one of your highest lifetime expenses. And two, it's something that we know is going to be owed over the course of the next 12 to 16 months. So in this situation, with $750,000 in salary and distributions, plus our $250,000 in consulting income, we are anticipating a total tax owed of about $361,000. And if you look, we want to also break that down and say, well, what does it look like from a federal perspective? What does it look like from a state perspective? This is very important to determine and work very closely with the tax team to ensure that we are, one, identifying what we think taxes are going to look like in the current year from an income perspective, and then two, making sure that our quarterly distributions are in line with our tax projection. So that's the first area we're always going to look at. The next area is going to be a question that we call, what does it cost to be you? Or what is your lifestyle cost? That's the top bar you can see up there in the red, which we call expenses or living expenses on the right-hand side. And in this situation, what we're going to do is we're going to assume that this individual is spending $10,000 a month after taxes. So for them to continue living their lifestyle, they're going to need $10,000 a month after taxes in their bank account in order to fund all the things in their lifestyle. So that's the second thing we're going to look at, because at the end of the day, the two things that are known is, one, you're going to spend money to live your life, which is your living expense. And then two, you're going to pay taxes on the money that you make. So after we have those two columns drawn out, the next column we're going to look at is, we're really going to ask the question of, like, what are our goals? What do we really want to accomplish over the course of the next year, 3 years, 5 years? Do we have an education expense? Do we have a retirement goal? Do we have a long-term planning goal? What are the different goals that we actually have in place, and how are we going to accomplish them? And that's really where I would say our job is to go do the homework. And what this is showing you is the results of the homework. So we're just going to give an example and assume that this client has already told us we have an education goal, we have a retirement goal, and now we've come back to them and said, okay, based on when you want to retire and how much you're spending, here's how much we believe you need to save. So in our planned savings column, this is going to represent specifically our qualified savings. So over here, we can see that we have $84,500 in our Roth IRA. I'm going to stop here for a quick second because as you're looking at this, you're probably thinking, how are you getting $84,500 in a Roth IRA when you're making $1 million a year? This is by utilizing what's called a mega backdoor Roth. And we could do this because there's consulting income. So if you're wanting to put more money into a Roth IRA, this is something that you might want to look at doing. You do need to have some self-employment income in order to accomplish this. So we're assuming $84,500 is going to go into our Roth. We talked about an education goal because this client has a couple of kids and we're putting $5,000 a year into our 529 plans. And then lastly, we have an HSA. So we chose a high deductible health insurance plan. When you do that, it allows you one of the best savings tools out there, which is called the Health Savings Account or HSA. The maximum a family can put in for 2024 is $8,300. So you can see that we're assuming we're going to put $8,300 into that bucket. And then lastly, down here, we have our taxable savings, which is over here in the yellow column. This is what we have identified as an annual savings goal in order to meet the long-term planning initiatives of the client. So this client wants to retire at 65 years old. In order to retire at 65 years old, they need to start saving $200,000 a year into a taxable investment account. So that's what this column is. And then this is a very important column that we often have to talk through at this stage in the discussion, which is after all of our goals have been met, our living expense has been met, and we paid our taxes, how much money do we think is actually going to be left over? And for this family, we believe there's going to be about $220,000 left over that we can either save additional money into our goals bucket, we can spend that money in our life, we can reinvest it into the business. And this is where a lot of discussions happen because one of the things that we find is when we go through these types of exercises with business owners, we get to this part of the category and they tell me, normally I don't have that much money, that much additional money left over. And that's where we start to then have a conversation of, okay, well, are you really spending $10,000 a month? Are you really not investing any money into the business? These types of questions help us to identify where the money's actually going for the clients that we're working with. So what I would encourage you to do is if you do not have one of these cash flow maps, I would recommend building it out, starting to look at, okay, what are my taxes going to be? What does it cost to be me? What do I need to save in order to meet my goals? And if you want one of these built out for you, feel free to reach out in the comments below. There's a link to set up a meeting with me. We're happy to put one of these together for you, outline what a cash flow map could look like, and help to give clear direction to your income that's coming in from the business.